You are listening to chartingwealth.com for Monday, the 29th of June, 2015. We are looking, as we always do, at IYY, total market. We have a confirmed downtrend. We have our last two-day candles significantly going down, a crossover going down on the 23rd of June, continuing through the end of the week as we go into Monday. Pay close attention to the charts. Again, IYY is the total market. It tells us what all the stocks are doing in total. Now let's look at the 4-hour chart. You can see a big down move starting where, those of you who listen to us every day, you know that we talked about around the 22nd and 23rd how it appeared that the market had topped, how we had a green candle on the 22nd, and how we continued to have red candles bumping up on the high. Well, sure enough, it rolled over on the 24th and started moving down. We had the crossover on our two-day trend line on the 25th or so. That is when the smart money got into the market on a down move, or out of the market if you weren't doing some kind of inverse ETF. And what we've seen is a continued down move significantly. So that is where we are. We've got both a confirmed down move on the two-day chart and a confirmed down move on the 4-hour chart, which is just what we like. Remember, we never got suckered into the up moves that happened after the Federal Reserve made their announcement that they weren't raising interest rates, because we never had a crossover confirmed going up. Just barely on the 23rd did the total market even cross over, and we never had that on our two-day chart, which never put us in that false, or what we'd call a feint, on that up move. It then turned right over and it started moving down. Now we've ranged back out to the two-day chart. Let's look at SPY. That is our Standard & Poor's 500. It crossed over going down way back on between the 28th of May and the 1st of June. It's continued to move down since then, except for that bump up when the Federal Reserve made its announcement between the 19th and the 23rd, and then crossed over going down after that. Derivative oscillator is in the negative, and the large two-day chart is in the negative. Now, if we range back to the 4-hour chart, looks very similar to IYY, crossed over going down between the 24th and the 25th, and has continued to move down since then below on the two-day trend line, confirmed down moves on the 4-hour and the two-day chart. So let's move back to the two-day chart and go to the Qs. That is the NASDAQ 100. Same thing, it never crossed over going up. We do see the derivative oscillator. We saw this on SPY also, the Standard & Poor's 500. Derivative oscillators lost a lot of its speed. We do have a confirmed down move. We have a greater divergence of the action line and the signal line and the MACD. And again, we've got a nice trend line forming up, a two-day trend line. When we look at the 4-hour chart, what do we see? We, of course, see the move below it. And that's what we want to see. Crossed over going down on the 25th, paralleling the already down move that we saw on the two-day chart, as you can see. So let's go to gold. What is gold doing? What is gold doing? Well, gold bumps up, actually crosses over going up on between the 17th and the 19th, and crosses over going down between the 19th and the 23rd. What's that about? Well, again, about the Federal Reserve's announcement, but gold spiking up and then rolling back off. And what we see happening is we see 3 candles on the two-day charts trending down. The derivative oscillator crossed over going down on the 26th, and we have a confirmed down move on gold on the two-day chart and on the 4-hour chart. Again, the 4-hour chart is below. We can see how it looks like gold is trying over the last day or so, has tried to bottom out. You can see all the way back to the 24th where gold reached the low that it hit on the 26th at the end of the week, and started moving up a little bit. Actually, gold was up 0.11% for the day on Friday. But again, don't be fooled. That has not crossed over going up. We still have the 4-hour and the 2-day chart have crossed over back in time going down, and there is no crossover going up on gold yet. Don't forget, folks, as we always talk about this time of year, remember, selling may and go away. It means the big money's moved out. There's a lot less volume. Smaller things can move the charts more. That's why it gets choppy. That's why a lot of the smart money leaves the market in the summertime. You trade those great 6 months that end and at the end of May, and you go away just like the smart big money does. So that is where we are right now. Hope that the markets treat you well as we get into this new trading week. Please do make sure to follow us on chartingwealth.com's Facebook and Twitter pages, and at chartingwealth.com. Sign up for our newsletter where you'll get these video audio reports every day, plus our weekly review and forecast. Thanks so much for joining us. We wish you the best from chartingwealth.com.